So there is now this whole narrative on social media as well as to how India has not performed for many years, and global markets are, running away. And India has lost out on many themes like AI, robotics, ML, all of that. So India will continue to not perform. And so there's this fear mongering, there's a little bit of, there is an overall atmosphere of resentment towards Indian stock markets, right? You can sense it as well. How does one read into that?
Two, three things. Okay, I'm not even disagreeing on what you've said right now. But what has structurally happened to the stock market is pretty phenomenal in the last 3, 4, 5 years. This spate of public issues, I know when we talk about IPOs, it's more held in the negative way than in the positive way. But what it has done is actually broadened the market. The number of categories which will become industries going forward that has been created in the last 3, 4 years. I can go on naming, say hospitals, the AMC market, the capital market itself, chemicals, textiles have all been added in the last 3, 4 years. These were non-existent. So, and all of them are mid and small. So when you look at that in perspective, the Nifty 50 is no longer the standalone face of the market. It's become Nifty 500. Right? And a lot of possibilities are in this 450 stocks now. The fund managers in 2016, I'm not trying to sell a fund, but I'm just giving an example. When we stopped our mid-cap fund, the Mirasit Emerging Blue Chip, I know you all had covered it then. We stopped it because of lack of opportunities. That is not so today. If you look at the last revival, you look at the small cap space itself. The smallest small cap is bigger than the smallest mid cap of 2019, right? The market has expanded. What are you asking your fund manager to do? Out of these 500 stocks, give you 80, 90 good stocks, right? But with that comes with the only thing of patience. Sit in this market. I can revisit this every year, Sonia.
So you still are convinced about this India growth story?
We are fully invested as a fund house. We have absolutely no... See, in adversity gives you opportunities. Because things are like this, some of the prices that are available now were extremely expensive last year. Right? The whole key is to identify this. Now, to be an investor, the fundamental requirement is to be an optimist. Right? If you feel tomorrow is going to be worse, then don't come into this investing world. It's going to hit you very bad. Things can get gloomier also. By the looks of it, if this war continues another 50, 60 days, it can look worse from that. If it looks worse from that, the same stock will be available at a slightly cheaper price. Do you have that ability to do it? That same person will not comment if the price of the house they stay in does not appreciate for 5, 6 years.
Correct.
Why is that behavior different with this asset class?
Because I think the house that you stay in does not pay your bills.
The house that you stay in does not have a daily NAV or does not have a stock price. Our transparency is the price we pay.
It's not liquid asset. No, that's why.
So then if you're okay with your house which you had bought for investing, does not appreciate for 5, 6 years, it's perfectly fine. But why are you not giving that same time? Anybody who will tell you that I made money in real estate would be over a period of 15, 20 years. If you made it in 3 years, it's been just luck. The same philosophy. All rules of asset classes are the same. It's not that equity will behave differently than this. People are comfortable sitting on gold, not making money for 8, 10 years, right? They will not flinch. They will not even discuss. But why? See, as we mature as equity market investors, we will also develop that. You go to the US, when the markets had corrected in 2008, 2009, actually institutional had sold, retail had not sold, right? In Europe, they're perpetual investors. But my only worry is that every country has a zone. I'm just worried that this behavior comes after the bulk of the returns are away. That will be very sad.
What behavior?
The behavior of holding. See, in our lines, a good distributor advisor in a global market, a private banker, is above 45 years of age. And I'd asked a very dear friend, why is that so? He said, above 40, you finally have the ability to hold allocation. Before that, you are always fluctuating. The ability to hold allocation is the key to wealth creation in capital markets. You should always rebalance, review. But you have to hold the asset class. You hold others very nicely, right? I'm just saying the same person's behavior towards real estate, gold, and like you rightly said, this is something which is my takeaway from this discussion. Gold versus gold ETF, the behavior has changed. Why?
Okay, 45 minutes passed by really fast, Swarup. I didn't realize that it's been such a long time. But we discussed many things. But I have to ask you this because I'm sure recently you saw that there was this whole controversy about, retirement. And I asked what I thought was a very simple question that, if I do spend about 1 to 2 lakhs a month and I am 40 years of age, how much will I need at 60? Now, the answer was 40 crores. And I get why there was rage, anger, backlash on it because it seems like a very unattainable and unnecessary number. But the larger argument, really, from my standpoint, is that A, people are not even talking about their retirement, which is an issue, and B, people live in constant fear and anxiety about how much money they need. Because whether it's 40 crores, whether it's 20 crores, whether it's 30 crores, we are not having those money conversations. So I wanted your take on this. A, how much money do I realistically need at retirement? By me, I mean an average 35-year-old who is earning in a metro city and has expenses. Chalo, let's take 50,000 rupees a month expenses, right? What should the retirement math look like?
See, first of all, Sonia, and I told that to you post that. I'm so happy you started this discussion. This discussion needs to be had or at every point of life. Because at that age, whether you have a companion or not, the only thing that will be your friend is money. Right? You might want to die, but that ventilator will not let you die. And the cost of ventilator per day, you go and check. Right? So, first is if you don't want money, then you be absolutely healthy. Right? Then nobody can do anything to you. But the need for money is dire. And that's something which people must realize. If I do a simple math, and I'm assuming that you're talking about 2 lakhs in a city called Mumbai, which is an expensive city. And if you want to retire in Mumbai,
No, let's reframe that, okay? If you spend 50,000 rupees a month, right, in a tier 1 city, how much do you need at the age of retirement?
see, it depends on two things. The erstwhile advice was post-retirement, just shut down and lead a very meaningless life, frugal life. That's not something which anybody who's spending 50,000 today wants to do more with life, right? If that be the case, then I would, without any subject to anything, and it's doable, at least gun for 10 crores. That's where I would start from. And it's little bit of planning will take you there. See, it's not about how much you earn. It's about how much you invest. If I were to give you my AMC's track record, the largest portfolio belongs to my branch manager of Bhubaneswar. And he's paid a Bhubaneswar branch manager's salary, just to put things in perspective. Some people in Mumbai do not have that portfolio. It's about how you invest. And I say this with a lot of pride, that this young boy, he's not a young boy, he's a man now, has identified this early in his life. And he's built his portfolio, right? He has a wife and his daughter, he has a car and a house, everything apart from that portfolio. Simple reason I gave this example is that it's never about how much you earn. It is the disciplined investing, but more important, the need to invest. I mean, I'm just putting a gut, because this 10 crores is something which I had said before COVID in one of the shows. And people had really broken down on me. So, conservatively, please understand, India is going to get more expensive. Your hospital requirements will be needed. If you want to a little bit of lifestyle expansion, you deserve that lifestyle expansion. That's why you work. So then at least, and do a little bit of math. There are enough planners or calculators on screen. Just do that. It's not much. A 35,000 rupees SIP at a top up of 10% every year, at a growth rate of 10%. Gives you 1 crore in 10 years.
But the value of that 1 crore in 10 years will be...
No, but that is how it compounds. After 10 years, the compounding really starts, right? I'll give you a very simple math. We talked about underperformance. Let me discuss one fund of mine. Okay. 14 years ago, I invested 1 lakh. That is 14 lakhs today. You will say 1 lakh per month, fantastic. 1 lakh per year is fantastic. Now, if I don't do anything and the fund gives me 10%, I get 1.4 lakhs a year. That's the math. On 14 lakhs, I get 1.4 lakhs. But you've done the hard work of 1 crore. 1 crore compounding on the next 10 years is incredible, right? But getting that first crore is always the toughest. So please, it's a brilliant country to be in. You are the only country that is growing at 6%, irrespective of what is happening to the world.
So if the math works out, then why do you think there was so much backlash around that
Lack
number?
of planning. Sorry, I know I'll take a backlash on that. People have not planned their requirement. Ask any people. We do this theory, this exercise in our AMC. कि बस कितना पैसा लगेगा? You'll be amazed how many people do not know कितना पैसा लगेगा. You'll be amazed. The person who is writing in all earnestness, and I'm asking that person who's written, have they written down a plan and actually checked at 6%, just 6% inflation? I'm not talking about lifestyle inflation, which will be a killer. At 6%, how much they will need? On your math, at 2 lakhs, the person will need 8 to 9 lakhs per month when he or she is 60. If you want an 8 to 9 lakh rupee per month, your portfolio has to be 20 crores.
Okay.